Dow's off 190, Nasdaq is up 24, S&Ps are up 14.5, and bottom line, so the Supreme Court is saying that the New York grand jury subpoena for Trump's tax returns have to be turned over.
Yeah, I don't know if the market's reacting to that.
Well, I think it is. I mean, as soon as it came across,
I think it could be as well. And this may be yet another, not a nail in the coffin. There's 4 months to go until the election, man. We know how every week can change the course of what people are talking about. But if that starts to come out, not what Trump wanted to hear this morning, for sure.
Right, and what happens? It doesn't mean that we'll see those tax returns, by the way, either of folks. But what does happen? This goes back to the Stormy Daniels, 130 grand. If in fact he wrote it off as a business expense. So it's a serious matter for anyone when you start dealing with this. Okay, so we'll see the second rule. There's going to be a second and third ruling coming out in the next few minutes. As to whether Congress can get the tax returns, but the Manhattan District Attorney will get them. So
yeah, and it's specifically hush money payments that Trump allegedly paid to facilitate two women in terms of how that money, where that money came from, et cetera. Yeah.
Right. So market-wise here, this is going to get interesting. Let's go take a look at that S&P. Well, actually, let's look at the S&P first. Okay, so the S&P has had that tough time right at that gap. So a gap down was the baby, and we'll see. What happened yesterday, folks, is that the market itself rejected lower price and did have lighter volume. If you take a look at this S&P, that's what we actually did. We got under the low of the prior day, and it said, hey man, you know what? I don't want to be down here. So we'll see how this shakes out. We got, let's see what we got yesterday. So you got 54 million shares yesterday. So you're going to have to blow that number away first, then blow away 312. And right now you're at 312.70, and right now we're at 314.72. Okay, so natural gas, Tom. Let's go take a look at natural gas.
Yeah, let's see what we have going for that market.
I think I'm getting bullish on natural gas,
Okay.
Yeah. So let's see.
You and Warren Buffett, man.
Yeah, I think so. Whisper number 57, survey number 57.
Okay.
So let's see. NG, natural gas. Where's that? Okay, so we're dealing with the August contract. You're at 187. Yeah, this is going to get intriguing, man. It's not today, though. Interesting. Okay, so even though I'm bullish, I guess it's going to pull back first. Okay, so what I'd be looking for today, I'd be looking that it actually natural gas pulls back. So what we did here, folks, is this. You hit a low of 151. You had a great sign of strength going all out to 192, but it looks like it's just going to back and fill. Like it came back to 175. That'll probably be the buy, because I start looking at this UNG, and I think that's the same thing, meaning that, the UNG's at 1092, but if that could back down into somewhere 1020, I think that'd be a pretty good buy. Okay, so where do we go here? Let's see, WHIS. So if I'm saying that it's going to back down, that would be a bigger build, Tom, right?
Yes. Okay. Yeah, you want more supplies, more of that commodity in the market, so that people are going to pay less for that commodity, right?
Okay, so what about 62?
Sure, 62.
You think
Round
that's
it
enough?
up.
I don't know.
Yeah, that's usually a big natural gas doesn't
it's really
stray.
close.
I say that, hey, but they also say go with your first
62.
instinct, man.
We get 62.
They say trust your first instinct. When they teach you test taking strategies and so forth, when you start getting into that second guessing game, you can send your mind down a rabbit hole. Usually your first instinct, if you're thinking things out thoroughly and properly, is usually the just in general. Not there, but why not?
I agree. That first deal, no
you
matter
can question
what it
yourself
is. Yeah.
Over and over and over and over,
There's no doubt. So let's go over to the gold contract, take a look at gold out here. So we got gold, folks, a year over the breakout area, and it's hanging tough, so this is going to be pretty cool watching this shake out, man. Bottom line is that you're at 1817. You got monster volume again today. We got 139,000 contracts already today, man. So that says we're going to start banging out 230 again. Yesterday we ended up doing 248. So good numbers, man. Good numbers. And if we go to the GDX, we take a look at the GDX. That little baby, it's up 7 cents. That also came in with decent volume yesterday. We did 34 million shares. You had a swing point out there with 30. So there's an ABC up. This is a monster ABC up too. Pretty cool.
Yeah.
Strong action out there. This bond market, man, this is crazy, folks. So
it is interesting, just sputtering along, man. I put that on like a year daily, just right when you said that. I put the 10-year even. Talk about holding the line of about, coming into that 139.15, ticking across. How many times we're going to bump up to that level, man, and we're up again.
Exactly. And so we've been here since, March 9th. But the way this is trading, like yesterday, the volume went up. Today, it'll be close today. We did 216,000 contracts in the 30. We're at 99. Let's go look at the 10. What's just amazing about this, man? The correlation is that you don't have markets at all-time highs and the bonds at all-time highs, but we do.
Yeah.
I mean, but it's almost looking to me like it's going to break topside, man. Yeah, see this yesterday? Look at it. The 10-year yesterday did 929,000 contracts. That's big contract volume, man, for the 10 right now.
I mean, that level to me looks like 139.15, where that's going to be, we're only 6 ticks away from it, right?
I know.
But, when I put this 10-year, the ZN, on that chart, man, 139.15, it's as plain as day. I mean, it bumped up there. At first, it spiked above there on the ridiculous acceleration on March 9th. You were up there again on March 10th. You made it back to that level on March 27th. You were up there April 1st. You were back around there in the middle of April. You were back around there May 8th. You're back around there May 15th. And then, we had that euphoria where we got to about a yield of 0.9% when that 10-year pulled back to June 5th. But guess what, man? We're right back up to that level again June 30th, and now we're coming right back up, man.
And 0.9% seems so large interest rate right now because we're at 0.6 now, right?
Yes.
Isn't that funny? 0.9. Yeah. Think about that, folks. That's sick. You can think that a 0.9 is a high interest rate, okay? The bottom line is that we're 0.65 right now, and 6.5 or 6.1. I'm gonna say, 6.3, 0.63. So it's gonna be wild. Just rates, rates coming down. Next week, Tommy, I meant to ask Kevin Hinks about the commodity markets today because where I'm going, folks, I think inflation is kicking in a monster way here, and that's why I think these markets are staying higher actually, because if you have all this money. So picture this. When I was doing this number, in the whole world, there's $2 trillion worth of cash. This is off the United States Treasury site. So there's $2 trillion worth of cash in circulation. Hard cash?
Okay, actual paper money, whatever it be.
Money. Well, when we just did the CARES Act, they put $3 trillion into the marketplace.
Paper money's going out of style, man.
Well, and so you're looking at it, it's like, okay,